Taking a look at the overall market, we're approaching an extremely strong resistance line that dates back since 2008, potentially 2010. I'll explain further as well, but we're approaching it where there's going to be two things that happen. You might not want to enter right now because this would be the peak and you would wait for the dip, so that way you could buy on the dips instead of buying right now at the all-time high. Or you're expecting it to break through, which I'll provide fundamentals explaining why I think it will break through, and then you'll be missing out on the massive run-up that we'll be seeing if we do break through. The upward trend resistance line that I'm talking about is, you can see right here in 2010, we got knocked down, we went up to it, got knocked down. 2011 went up to it, got knocked down right here as well in 2011. From 2013 to 2015 had issues passing it the whole entire time. We did have a lower upward trend resistance line as well, that in 2015 we had issues passing, 2018 passing, and in 2021 as well passing issues. But we did pass it, so that is a good sign, and we're approaching the main resistance level at the moment. And if you are anticipating that it's going to drop down, so this is the peak, then you're anticipating it to drop down to this support level. In essence, I'm going to explain further, but in essence, drop down to that support level and then hopefully bounce up to the upside. Hopefully, this support level is the main support level, by the way. You can see in 2008 we bounced off as support, potentially in 2011, but mainly I would say as well in 2016, in 2019 right here, and in 2020. Now that is not a guarantee that would be the main support level. By the way, we have like other support levels in the meantime as well in between, plus the moving averages we could rely on as support as well. So if we were to drop, we could bounce off the support level. Not guaranteed, but that is a potential. Like you can see right here, this moving average right here, we bounced off as support twice. So one time right here and a second time right here. So just keep in mind, it's not guaranteed, but they could act as support or resistance as well. But then this is another major resistance or support level that we could rely on if we were to dip lower, so lower than this support level right here. But this is where it was the 2000 housing crisis, 2008, 2009, the bottom of the housing market crash. And then here's the bottom of the pandemic as well. This is more for later dates. I'll keep you guys posted in the future videos where we get close to these levels. And this would be like timing the all-time lows and seeing if you could enter at this time and if it's ideal. Now, the thing is though, timing the market is extremely difficult. And actually, before I explain the fundamentals and all that stuff as to why I think we're going to break out to the upside and explaining why timing the market is hard, quick disclaimer before I continue. I'm not a financial advisor. I'm not a professional. Everything I do share with you is just my opinion. It is not advice. So please do your own due diligence and research before buying and selling. And now if we get back to the graph, I want to show one thing. So in terms of timing the market, even if you are not great at timing the market, and if you were trying to and all that stuff, let's just say you just didn't even care about timing the market and you entered at the peak of before the housing market crash right here, then if you were to average down, which is ideal, but let's just say if you didn't average down, you would have got your money back in 2012, 2013, and then from then on it would have been profits all the way through. And if you were averaging down, you would have made profits on the average down back in 2013. So going back up, you would have made profits off them, plus broke even, and then everything else would have been profits from the averaging down and the peak of the purchase you made all the way till 2021, which would have been awesome. And if you would think that it's going to be going down overall, I think the play would be close to 2011 right here, where we went up to the resistance level, back tested it, unfortunately got knocked down, and then went back up again second time to back test it, unfortunately got knocked down, and then started going down overall in general sense to the support level, and then finally bouncing up to the upside. So same thing could happen, because if we were to drop down, let's just say forget about all the support levels until this major one, then right now as of July 2021, it closed at 4,353 points, but we would be going down to 3,500. I remember it was like 47 points overall, so 3,547 points, and then bouncing up to the upside, hopefully. Not guaranteed, but hopefully. But in the meantime, we do have other support levels, like I mentioned, even this moving average right here at 3,803 points. This moves, by the way, so don't base everything off that point I gave you right now. Now, most likely, like I stated, it'll go sideways. If it were to go sideways, let's just say in January 2022, you could expect to hitting 3,773 points. But either way, what I'm expecting is it's going to break up to the upside, and this is the reason why. So, and if it does break up to the upside, by the way, then what's going to probably happen is when it breaks up to the upside, it's going to come back down on this resistance level and act as support, so bounce off it. Hopefully I can visually show it right now. So let's just say it breaks through, then it'll probably come back down, bounce off the support level, and then go to the upside. And we should have a nice run up overall. and I'm going to provide more fundamentals. But one other thing, if you think this is the peak, by the way, then you would want to hold off buying stocks for the overall market and just wait until it hits the lower levels in essence, and then enter. But again, extremely hard to time. And how much is the risk worth? Let's say if you exited here and then entered here, the difference is 1,339 points versus 1,130 points. Not much difference. Like it's about 210 points. So it is a pretty good difference actually, because the percentage was actually major difference right here. So it's technically worth it, but it's extremely hard to do. Just keep that in mind. Just want to make it aware that it's extremely hard to time the market. Now the reason why I'm optimistic it's going to break up to the upside and have a nice run up, because if you were to sell here, you would miss up on the run up. That's the thing. That's the only problem. But the reason why is if you look at unemployment numbers, they are right here, U.S. unemployment numbers and all that stuff. They are still decreasing, even though they're a little bit stagnant at the moment, but still nonetheless decreasing. So that is a good sign. Bankruptcy numbers for the United States still decreasing as well. So from 2012 all the way through, still decreasing. So that's awesome. Corporate numbers. So in terms of United States corporate profits, during the pandemic obviously dropped, then went back up to normal levels. Yes, it dropped a little bit, but we went back up recently as well. So this is the regular cycle, and it's still improving overall. Plus, interest rates. Interest rates are extremely important to me in terms of there's a lot of reasons. I explained in the past multiple reasons, but essentially if interest rates go up for general sense, then expect stocks to go down just because of corporate profits and all stuff get affected. But we're looking at 0.25 basis points, essentially 0% interest rate for the most part. And we're not anticipating a rise in interest rates, Fed interest rates, until 2023, 2024, based off my last video I posted. But as of recent developments, 3 to 4 weeks ago, the Feds was indicating that potentially they could be increasing interest rates in 2022. But for the time being, given all the positive news I gave you in terms of unemployment, bankruptcy numbers, corporate profits, all that stuff, plus what I'm going to explain further with the MAC line, I think we have enough technically momentum to break through the resistance line. And if we do, the reason why that's significant is if you break a pretty strong resistance line or support line, right? So if you break through this resistance line, you're expecting usually a pretty good reaction to the upside. If you break a support level that's been holding off for so long, you could have a pretty significant drop overall as well. So if we were to break, not necessarily this support level, by the way, I know I'm going away from the resistance level, but quick thing, if we were to break the support level, yeah, it would pretty much not be ideal, but breaking in this support level would be pretty detrimental because it hopefully would not be a false breakout. And if it was hopefully it would be a false breakout and it would bounce back up to the upside. But if it's not a false breakout, the drop could be pretty dramatic, where it would be pretty severe actually overall. So hopefully that's not the case when we have a future major drop again. Again, this was a housing crash. This was a pandemic. Whatever the next major drop would be, hopefully it abides by this upward trend support line right here. Now, in terms of resistance line, like I stated, if it breaks it, we could have a nice run up. Not a guarantee, but I would anticipate that, and like I showed, bounce off and all that stuff, etc., etc. Now, the reason why I'm thinking it's going to break up to the upside as well, like I stated, with all these unemployment numbers, bankruptcy numbers, and corporate profits, but not just that, this MACD line. So this indicates if it's a bearish or bullish movement. In terms of the 5-year movement, it is right now, it is in the negative, so it is bearish, so it's not optimistic. But if you look closer, you can see that these bars are becoming a lighter shade of red, and they're becoming smaller. Plus the MAC line is curving up, trying to cross over to the positive. So when it crosses over to the positive, it'll be a bullish movement and optimistic. And I think that would be enough of a momentum to pass this upward trend resistance line. That's what I'm anticipating, because by the time it crosses over, I think it might give it the nice bump to the upside. Essentially right now, if you're trying to pass this upward trend resistance line, because keep in mind, passing it back in 2015, you would have had it pass like 2,114 points, but not necessarily that, like let's just say 2,200 points, and you would have been in the clear. Hopefully it wouldn't be a false breakout, but now you need to pass essentially for the most part 4,500 points to pass it. The longer you take to pass it, the higher the points will be that you need to hit to pass this upward trend resistance line. So if you're watching this at a later date, just keep that in mind. Right now, again, is it July 2021, close at 4,353 points. So yeah, there's that. And then if we look at the all graph, so there's another reason why. So this is one of the reasons why I think potentially it could curve down, but I'm not really expecting it to curve down. So if you look at the maxed out graph, The MEC line is indicating that is a bullish movement. It is optimistic, which is great, but it is showing like a slowdown. So if you look at this bar right here, it's a lighter shade of green. It is a little bit smaller. Potentially could be a slowdown, which is in time for getting knocked down by this moving average right here. Or no, resistance line. Sorry about that. Could be knocked down off this resistance line right here, and we can start trickling down, like I stated, to the support level, essentially. But we've had this dip before where the MACD line bar became a lighter shade of green plus smaller, and yeah, it did dip down, but then it bounced back up. So if you hypothetically did think that it was going to be an issue, actually most likely if that was the case, you would have entered at the bottom anyway, because you would have anticipated the bounce off this upward trend support line right here, the main one. So you could have probably timed that perfectly. It would have been difficult, but you could have, and then you would have had a massive run up. So it all depends on a bunch of factors. So if you could look at all the factors at once and make sense of them, then you could probably time it pretty well. But just keep in mind it is extremely difficult. So this video is just to show you that if we do break through the resistance level, we could have a nice run up to the upside, provided the fundamentals off it. If you don't think that's the case and you think we're going to head down, then you would probably not want to enter right now at the moment, because we're almost peaking and we could drop lower. And keep in mind, it could be like here where it's 2013 to 2015. The whole entire time we did not pass this upward trend resistance line, but yet we were still going higher. So you can see right here it was 1,850 points. And this whole entire time, if you were anticipating that this resistance line was just going to knock us down to support level, well, it didn't. All it did is just kept on hovering against and backtesting the whole entire time, all the way until 2015, and closed off at 2,090 points. So went up roughly almost 200 points the whole entire time for the next 2 years. Not massive growth, hypothetically. Well, actually, it is. It's 10% growth, if I'm not mistaken, or it's more than 10% growth for the past 2 years. So you would have missed out on a little bit more than 10% growth if you're investing on the overall market, or more based off if you're investing in general stocks overall. So just keep that in mind. Extremely hard to time markets, but I just want to show you that we're approaching the resistance level, and that is pretty important overall in my opinion. Hopefully you liked the video. Hopefully you found it helpful. If you did, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you like videos like this, or other stock videos, or other financial videos I'll be posting in the future, consider dropping a like. It does help out the channel, so thank you so much for that. And I'll see you in the next video. Peace.